Regarding Irish income taxes, CashCalc now fully supports the calculation of each of these taxes and provides specific flags and features to help adjust the cash flow for the various allowances and credits. So if we navigate across into CashCalc, I've selected Sherlock and Edith, our client, selected the cash flow tab and the inputs and timeline, navigated to people and timeline feature. You'll notice, because this is a joint cash flow, I've got the two clients separately listed, Sherlock on the left, Edith on the right. Underneath each one of those, I can straight away signpost whether a full medical card holder, so reduced USC rates will apply. I can also signal whether they're married or in a civil partnership, and therefore the tax assessment type is either joint assessment, separate assessment, or assessment of single persons. If you do select joint assessment, the system will automatically optimize the standard rate band allocation for each cash flow year. For whatever reason, if you don't want that to happen, you don't want it to optimize, if you just simply deselect that, you can set a fixed rate, maybe 50-50 each. And when it comes to income, if you select the income tab on the left-hand side, you can select add income at the very top. You can specify whether this income is employment income or other income. If it's other income, we'll just simply need to know whether it's taxable income or non-taxable. And if it is taxable, whether it's earned income or dividend income. If it is employment income, we'll just, again, need to know who the owner of this income is. Is it Sherlock or Edith? If it's Sherlock, let's call this maybe his salary. Obviously, the different tax rates will apply dependent on whether it's employed, self-employed, or company director. So we're going to say he's employed, 70,000. And we can also specify under employed whether it's part-time working as well as a percentage or a proportion of full-time hours. In addition to that, you can add bonuses as an amount or percentage. You can also add benefits in kind as well. And at the very bottom here, you can also add pension contributions, both from the salary and or the bonus. So if you click on pension contributions from salary, you can then specify what pension pot we want to pay into. We've only got one, so the Irish Life pension. Again, give this amount or percentage. We're going to say clients contributing maybe 6% into their pension. There's also an employer contribution that's being matched as well. So again, on a percentage basis, we'll say 6%. Note as well that you can create income changes. So perhaps, for example, this client is, yes, earning 70,000 for the next year, but he then expects to work part-time for the next couple of years up until retirement, and he's only going to be on 35,000. So we can say for this particular gross salary, 70,000, it's going to run from 62, not until retirement. It's going to run until he's 63, just for that 1 year. And then we can click on add income change. Now it's called gross salary 2. And we can say from that year onwards, we're looking at 35,000 for that client from a date to another. So this is going to run from 63 up until he retires at 65. And again, we can add that as an income. If I come back to this main screen, you'll note under the incomes tab, you've got tax credits. So you can very quickly add in the relevant tax credits. We've added them all under here, quick add. So there are all the relevant tax credits. You can click on any one of them. All of the fields would be automatically populated for you. So there shouldn't really be anything to change, including the amount and the likely start and end date. And we can click on add tax credit as such. You'll notice on the left-hand side under the contributions tab as well, the employee and employer pension contribution we just added under the salary has been included in here as an extra line item. So you can see that going in of 6% each. Now, if we go to my cash flow model on the left, you can see money in, money out will obviously be heavily impacted by the tax. So will savings over time, but more notably, so will the taxes tab. So the taxes tab will give you full visibility on the taxes being paid each year by each client. And if you hover over each one of them, say for the most recent year, you can see there's the income tax paid by Sherlock, there's the USC, and there's the PRSI. Now, if you wanted a better breakdown and the calculation behind all of this, if you click on the yearly breakdown tab on the left, again, there's a year by year, play by play. So we can click on the most recent year. We've got Sherlock's salary on the left there and Edith's salary on the right-hand side. And under Sherlock's salary, you can see being paid 70,000, the contribution, the employee pension contribution being taken into account. So therefore, the taxable earnings is actually 65,800. The income tax paid is 13,000. How do we get to 13,000 euros? Well, based on that calculation there, including the tax credits or lesser tax credits. You've also got USC paid there, the PRSI paid there, and so the net amount 47,725, and exactly the same for Edith on every single year, and that's what's impacting the cash flow. Incidentally, if you click on the liquid assets tab at the very top on each calendar year, it will specify the contributions and withdrawals in and out of every single one of your investment pots. So if you make note to the Irish Life pension, you can see there's, again, separate line items. There's the employee pension contribution going in, 4,200. There's the employer workplace pension contribution going in. So in total, 8,400 into that pension pot every single year, whilst Sherlock continues to be employed. So I hope you found that useful. As we said, these are the new Irish income tax calculations that are now fully supported within CashCalc. If you have any further questions, feel free to call our help desk. Thank you.